Hello, and welcome to the Wade Borth Podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, welcome back to the Wade Borth Podcast. Today, we're going to take a little trip down interesting lane. Let's call it interesting lane, and just some observations about where we're currently at from an investment standpoint. Now, just realize I never talk investments. That's not the purpose of this podcast. That's not where my expertise lies. It really lies in the savings and protection component of what we do. But I wanted to bring something up that was rather interesting to me. And it's just an observation. So just bear with me for a second. If you have a moment, go out and is anybody familiar with a guy by the name of Warren Buffett? I say that kind of facetiously because everybody realizes that this is probably one of the greatest investors of all time. Right? Berkshire Hathaway is one of the steadiest rocks you can find in the investment world. And we've been watching Warren Buffett because there's something really interesting to be learned from his behavior. And so what's been happening with Berkshire Hathaway, and again, I'm not an expert in the investment world and what Warren Buffett does, this is just my observation, is over the last year and a half, he's been selling his what he calls his prized possessions, which is Apple stock and Nvidia. He always said, I'll buy these, I'll hold them, I'll never sell them. Well, what we saw was that he was starting to sell these things. And part of our conversation is like, when we look at people that have wealth, that are wealthy, we shouldn't be jealous, but we should be curious, right? Let's have a little bit of curiosity around why they're doing what they're doing. And so, go out and Google Warren Buffett selling Apple stock and Nvidia. So the reason I bring this up is and again, if you listen to our previous podcasts or podcasts that we have kind of in this series, we're going to be talking about the flow of money and where money should reside. And some of that flow of money and where it should reside should be in a safe, secure location, savings, right? That has all these benefits. And you can go back and listen to some other podcasts we've done on that in the past. But if we haven't done it in the past, we'll be doing it right after this one. But just to the point is, money should reside somewhere that's safe, secure, liquid, has guarantees, can give you all these other benefits that you're going to have in a safe, secure dollars. Because when times go bad, it either protects you or, more importantly, it gives you the opportunity to take advantage of chaos that's going on in the market. So at the time of this recording of this podcast, what's going on? Let's give you a little flavor of the environment. So in the last probably month and a half, the stock market's been beaten up pretty hard. It's going down a ton. There's a lot of fear, a lot of uncertainty in the market, very little clarity where the country's going, recession, tariffs, all this stuff. This noise is going on in the marketplace. And so what does that do for us? Why you even care about that? Because what's happening to the stock market? So back up a year. Let's go back, 8, 10, 12 months, something like that. Warren Buffett starts selling his prized stocks, right? Nvidia and Apple. Now, he's got other ones as well, but these are the ones we're going to focus on. And I don't follow it day by day, but I do catch articles. There was a handful of articles that were just lambasting Warren Buffett. Now, they're questioning, is this guy lost it? He used to be the greatest investor ever. Buy and hold strategy, basically they're saying he's an idiot for selling these stocks. And they're making the point that he's losing millions and millions of dollars. Now, you have to realize Berkshire Hathaway value at that time was worth about $1 trillion. And he went from about a 20% cash holdings, or money that's sitting in a cash equivalent. Some of it happens to be in life insurance and insurance values as well. So just bear with me on that. But the point is, he was sitting in about a 20% liquidity position. And now that's probably up toward in the north part of 30 to 40% liquidity position because he sold some what he calls these super valuable stocks. So there's been article after article after article written about how this guy's lost it. He's losing millions and millions of dollars. And again, so now let's take a look till today. At the time of this podcast, or really yesterday when I was looking at this, Nvidia stock and Apple stock were down 50 and 40% respectively from their 52-week high. So he was selling taking advantage, take some money off the table, putting it in a cash asset. And they were complaining about him because now he sold these great stocks and he's not going to get a rate of return on his savings. Very little, right? Warren Buffett was happy with 2-3% on his savings account, in essence. Now, again, a Warren Buffett savings account is completely different than a Wade Borth saving account, just because at the rate he does it with a bunch of extra zeros at the end. So, but the point is, it's the behavior that we want to look at, and the mentality and the thought process. Because I hear this from clients all the time. It's like, oh, my whole life policy isn't performing like my investments, and I'm like, good. Nor should it, right? It's got it's got a whole bunch of different characteristics that investments don't have, and investments have a whole lot of other characteristics that your savings don't have. But this is the behavior that's going on with Warren Buffett. He was moving a ton to cash or cash type of equivalent of accounts. And so, again, bear with me as I go through this because it's so fascinating to me. He was moving to cash to the point where everybody's like, holy smokes, what's going on? And is this guy lost it? And he's losing out. He's losing millions. And I remember one article in particular, he talks about Warren Buffett is losing millions of dollars by moving out of Apple, because Apple was still going up a little bit at the time, and so was Nvidia. But he also knew that he had a tremendous amount of value that had accumulated in there. So what happened was, now the market's come down 40 and 50%. Think about, and let's say this is the bottom. I don't know if it is. I mean, that's the problem with investing, is you don't know. You have very little or no clarity or certainty going forward into the future. Unlike savings, which gives you clarity and certainty, again, those are different characteristics. That's why we love putting savings dollars into whole life insurance. It gives us the clarity, it gives us the certainty of when we need money, it will be there for us to use. But let's say this is the bottom of the stock market. When Warren Buffett goes, hey, I sold all those shares, the market went down 40 and 50% on those particular shares since that 52-week high. He can turn around and say, hey, I'm going to come in and now I'm going to buy them again. And if it goes back up just to where it was, his rate of return, his external rate of return is now, because he had savings, is now 100%. So remember with averages, in order to recoup going back, if you have a 50% decrease, it takes 100% rate of return to get back to even. So, but if he does, again, because he had savings and he had cash equivalents, market comes down, he buys in at the low again, and he goes back up. It's not a 50% increase, it's a 100% increase on his dollars. So his rate of return, because he had cash, is going to be way more than the 2 or 3% that he had in these cash type of equivalents. Because it's not about the internal rate of return, it's about what he's doing with those dollars when he puts them to work. And this is really the disconnect I see with a lot of average Americans. They think it always has to be like, it has to be always encapsulated in just the one item. Oh, I'm only getting 4%, or I'm only getting 3% in my whole life. Well, again, that's not the true story in itself, because again, of taxes and fees, and that's all net of all the expenses, right? So it's a great rate of return for a savings type of vehicle. But more importantly is, what are you doing with those dollars when the opportunity shows itself? How many people think about this? Let's say where the market's been, or if you want to look at gold and silver, that's gone up a bunch. Market's gone down a bunch. Everybody's like, oh, we should be buying. Maybe we should be buying Apple stock because we see it's going to go back up. How many people are actually in a position to take a significant amount of cash and be able to do that? We talk about it, but how many people can actually say, yes, I'm going to go ahead, I'm going to buy $100,000, $1 million, $1 billion worth of Apple stock? It's always great in theory, it's great in talk, but very few people are in a cash position to be able to take advantage of that opportunity. And that's really what people of wealth understand. They understand when you have dollars sitting, waiting to be deployed at the right time, that's value. It's like, if you think about it I did a podcast a long time ago, and I was talking with my son about the power of flowing water. You dam that water up. You don't put it to work yet. You hold it back, you hold it back, you hold it back. The longer you hold it back and the bigger it becomes, the more potential energy it has. And it will flow. And when you turn the valve on, it's going to flow with a lot of energy, and it's going to turn your turbines, and it's going to really accelerate your wealth opportunities. So let's just recap what we talked about. A cash position in of itself maybe isn't real sexy, but what it can do for you is the real benefit. That is really where you find the ability to grow and accelerate wealth. People will put money in the stock market, on a monthly basis or every 2 weeks or whatever it might be, and they think that's how you're going to grow wealth. I'm going to say you're going to write it up, you're going to write it down. You really know better off than anybody else that's out there doing the same thing. But those that have the discipline to put money in cash and wait for opportunities, and then have the courage and the understanding of how do I put it to work, those are the people that truly accelerate wealth. And that's the difference. That's the difference on how people of wealth think versus the conditioned thought process of most Americans. So I would encourage you to kind of think what we shared here. Listen to some of our other podcasts along the same lines. Go to sagewealthstrategy.com, hop on the podcast section, take a look at it. If you can't find it, reach out to me. Send me an email, wade@sagewealthstrategy.com. Or if you want to, give us a call, we'd love to have a conversation with you, because those links will be in the show notes down below. But the point is, it is a great opportunity. You can find great opportunities when you have cash. And so all we're talking about is, this is a great example of, are you able to take advantage of opportunities right now? And if not, the question is why. More than likely is because we don't have enough cash or cash reserved. Or if we have a little bit of cash reserved, think about adding a zero behind that or 2 zeros behind that. That's possible. That's truly possible in your life. Just by having some little bit of intentionality and purpose, and it's a thoughtful conversation how we can get there. And that's the beauty. Right now we're starting a campaign talking about how do we have a thoughtful conversation about how do we store more cash and how do we get ready for very uncertain times. And it's just about through discipline and just about a thoughtful conversation, a thoughtful process. This is, it should look like this, and it'll give us kind of that roadmap to our clarity that we're looking for. So again, I would say that if you like our content, if you like what you're hearing here, if this excites you and this thought process is like, I should know this, or other people should know this, like and share with everybody that like the podcast, because this is our thought process. This is my thought process. We take people through, an experience that is different than most people in the financial world have, because they always think, I just got to buy a product. The product isn't the solution. It's you identifying what it is that is holding you back, and then also now partnering with a coach like me, a person like me, to help you through a thoughtful process. That's really where the strength begins, and that's where you're going to really grow and have the opportunity and find the discipline you need in order to take advantage of opportunities that are going on right now. And again, is this the only opportunity? No. We can go back. I've told, I've shared with you stories from 08, 09, 2020. I mean, these things come up all the time. So just don't think that, I missed it, so therefore it doesn't do me any good. It's going to be a lifetime of opportunities. And the only time, this funny thing is, like, events will happen in our lives, and how we see them is either an opportunity or a negative event, right? That's one of the two. The only difference that typically, the thing that will differentiate those two things is, do we have cash to survive it or thrive in it? And if we have neither of that, then they're just negative events that are happening in our lives. So again, I encourage you, like and share this podcast. Think about the people around you that have the same thoughts, and then let's have a deep conversation between you and I, and say, how do we make this a possibility in your life? So just imagine if you had the type of cash that you wish you had to take advantage of this opportunity. So thank you again. I appreciate it. If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button, and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.